Hey everyone, good afternoon. Ryan Tonking from the Black Room here. Hope everybody's having a good day today. It's been the beginning of the week was pretty slow, but today was really nice. We had a lot of nice stuff at the Open, and I had a couple really nice trades at the Open. I only had one official call on the ARWR today, which we'll look at in a second. I'll pull up a picture of the call on the ARWR, but caught a couple things at the Open. And yeah, we had a really good gaps list today. It really reminded me of last week. Last week it started off really slow. Thursday came, we had a really nice gaps list on Thursday, and really was able to make a majority of the week's profits on Thursday. And so far, this week's kind of starting off the same way as far as Thursday. Monday, Tuesday, or sorry, we were off Monday, Tuesday, Wednesday. Finished down hour and a half on Tuesday and a R yesterday, but today had a really nice open. So I was able to make several R's at the Open to cover up from the week's losses and to put me in the green here. So I wanted to talk about something because the title of this video was that when I take a trade that's out of strategy or a bad trade, I'm really risking more than 1R on the trade. Okay, so we're going to take a look at, and I was talking about this when I was on the mic moderating, and okay, so let me just run through the Open real quick. I had and I'll let you guys know where I was at mentally, and the reason why I passed on this NAV trade. Okay, so I took the ARWR, that was the official call, right? So this was the numbers. It was on the 1 minute chart, high of the day by low of the day, so long over the high of the day, stop under low of the day. This is the trails here, right? So you can look at that, and then I just took another picture here. This is the last quarter, right, at $20. Okay, so really nice trade. Hold on one second. Okay, I just had to get out of the BEN trade. Okay, really nice trade was on the 1 minute chart here. Okay, we had put in this small topping tail. We retested here the $18, and then we went long over 18.31 by $18. Okay, what was this on the daily chart? It was a professional gap up here. All right, right over support, had some shock value from yesterday. So this was my number 2 gap up today. The CLDR was my number 1 gap up, which I played as well. That when Sammy was on the mic, he had the numbers for the CLDR. So I was a little bit busy in this morning, but both of those worked out really nicely. And so the long entry was here. We took half inside this green candle here, which was about a hour and a half or so. We took another quarter at 1950, I believe it was. Yeah, under 1950 in this bottoming tail here. And then once we broke $20 here, I took the rest. All right. So it was a very nice trade, but I really only captured half the move here. Right, here was the last exit, even less probably. Yeah, it was a nice trade. It was a 35-cent stop, and we got $1.60, I think, or $1.65, somewhere around there on a 35-cent stop. But it continued $2 past that. Okay, so I get on the mic, and I don't see too much out there, and the ARWR was continuing higher here, and so this was bothering me a little bit that I didn't catch the whole move, right? It was still a nice trade, but I didn't catch the whole move. So the number 1 watch that we had was the NAV, and I know it's kind of a long way to go about the subject at heart here, but it's important that I kind of set the tone of how the morning went, and because it plays a influence, which we'll get into. So watching the NAV was a pro gap up, didn't clear this base like the ARWR did. We ended up getting sold, and we got sold through this daily base here, right? So this is a gap berry. I like to play gap areas on the 5-minute time frame. We did get a 5-minute sell setup here. Okay, so as this was basing, I said we kind of have a wide range bar and we're basing at the top of that wide range bar. So I want to see a breakout failure on the NAV. Okay, so if we drill down to the 2-minute, we were watching this go on and we got this small move up here and then we pulled in, right? Small move up, just like this. And I said, because this was the favorite watch, and I was on the mic, and I said, this isn't enough of a failure pattern for me to play this short here, okay? So the pattern that's presented isn't good enough for me to play. So unless we base down here again, I'm not going to be able to play this sell setup, okay? And so I think this is important because this was a 5-minute sell setup. It was extended on the 5-minute time frame, right? Let me pull the 5-minute over here. It was extended on the 5-minute time frame, and it wasn't set up perfectly. Okay? So as I'm on this mic, obviously this trade worked out really nicely if you took it. Okay? I did not take it and I decided to pass, which kind of sparked this conversation and the heart of the subject that I want to talk about, which was if you take a bad trade, if you take a trade that's out of strategy, and I want to make it very clear that a trade that loses money isn't necessarily a bad trade, and a trade that makes money isn't necessarily a good trade, right? If you've been trading for a significant period of time, you'll know exactly what I'm talking about. Well, I shouldn't say significant, even a short period of time, you'll know exactly what I'm talking about, right? So the pattern that was presented was not good enough for me to play, so I ended up passing. All right. Now, even though this worked really nicely and probably would have been a, I don't know, 2.5 hour trade, it was the right thing to do to pass. And I think what's important is looking at, when I look at trades in hindsight, like, oh, this was a 5-minute sell setup here on a gap area, which I, could have played, and, it worked out really nice. Why didn't play this and stuff, right? The important thing to look at, which I rarely did, especially in the beginning, was, well, how much was at risk with this trade, okay? And when I take a trade that is not in strategy, or a trade that is just coin flip, or something that, I feel like this could go this way, right? Whatever that looks like, okay? When I take a trade like that, I'm risking more than just that one risk unit, okay? So if I were to short this here, right, and place the stop above here, yes, I'm risking one risk unit financially, okay? But the reality is, if this were to trigger, come up, stop me out, and continue lower, or do whatever, right, stop me out, and I were to take a stop on a trade that I knew was not in my strategy, then not only would I have lost the one risk unit that I placed on the trade, right? Not only would I lost the financial risk that I put on that trade, but I also would have really, because because I was a little bit off because I missed the whole move on the ARWR, so that was bothering me a little bit, right? I would have, because of the mental place that I would have put myself into by taking a trade that was out of strategy, I would have literally jeopardized the entire rest of the day for my trading. And I don't think, if you're a discretionary trader, I don't think a lot of people think about that too often. Where if I take a stop on a trade that I know is out of strategy, I'm not jeopardizing this trade's risk unit, but I'm also jeopardizing several risk units in the future on the next couple of trades, right? Because I can enter into a state where I'm like, okay, let's get really aggressive, right? And I missed this, right? And so let's short some more down here, right? Which isn't inside strategy either, right? So I open the door and I expose myself to future losses down the road if I take a trade that's out of strategy. All right, and if all you have to do is look back on some days where you've had some max loss days, right? Or look back on some days where you really just did not feel okay emotionally, and look at your trades. And what I saw, and this still comes up periodically. It's nowhere near like it came up when I started trading, right? But when I make a mistake or when I take a trade that's out of strategy, I open the door for exposing myself to taking another poor trade. Right? And this is why discipline is so critical, especially if you're a discretionary trader. I'm not a machine, right? So when I take one trade, as much as I'd like to tell you guys that, well, that trade's independent and the next trade, every event is, unique in the market, and so it has no, direct correlation to the next trade, right? As much as I'd like to tell you that I don't carry any emotional baggage over the next trade, I do. There's a part of me that does do that. Now, there's a process that I go through with dealing with carrying forward that emotional baggage, and there's a process that I go through that doesn't let that emotional baggage affect my decision-making process, right? But because I'm a human being, I do carry some emotional baggage to the next trade, right? I'm not a machine. And I also believe that you can't make a decision. Science has shown that you can't make a decision without having any emotion, right? So I know this is getting kind of long-winded here, but I think this is a really, really important concept here, that even though this trade worked really nicely, and even though I could say if I would have taken this, I would have made, the 2.5 Rs, right? An R unit for me is $200, so I could have made $500 on this trade, right? The reality is that I had 2.5 Rs to the upside, but I probably had anywhere from 2 to 4 Rs to the downside. Because not only could I have lost an R this trade, but I also it could have affected my decision-making process for the rest of the day, right? And I don't know what the rest of the day is going to hold, right? So hopefully, I know this is kind of a big topic, but hopefully this was helpful to you guys. Let me know if you have any questions about this. Hopefully I explained it right, and we can cover this more in the future, but I do think this is really critical. If you're a discretionary trader, if you're a pattern trader, that taking trades outside of your strategy is, if you're human also, right, taking trades outside of strategy, you can't treat them in a vacuum. Right? Just like trading taking one buy setup, you can't treat that in a vacuum as well. Right? We look at multiple time frames, we look at, what does the daily chart look like, all sorts of stuff, right? So okay, so hopefully this was helpful. As always, stay in process. This always is a process for me, and it's just really important, especially in these slow times, that I stay disciplined, right? I'll stay focused on myself, that I stay disciplined, and that, there was a lot of opportunity this morning that I was able to take advantage of, and, we'll see what the rest of the day brings. All right. Thanks, guys. Appreciate it. Keep your trades inside of your strategies, and your edge will win out in the long run. All right. Thanks, everyone. Talk to you soon.